Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday. Today is Monday, May 19th. Happy Monday. I feel pretty good today. I'll tell you something. I've been very happy over the past week and a half to see this tariff policy really, and Peter Navarro, go to the back seat as more the adults in the room, Scott Besson, et cetera, start to really take over trade policy. I've noticed that a lot less talk about that. And you see how the markets have done. That has been a good sign. The other thing that I've noticed in the past week is that we're starting to see takeovers again. Foot Locker was bought out by Dick's Sporting Goods last week, which, by the way, is a terrible acquisition for Foot Locker and for Dick's Sporting Goods. It's literally a strategic mistake. It's very difficult. Dick's is going to go out of their way, invest a whole lot of money to buy Foot Locker, which is a really low performing business with low returns on capital. So they're talking about spending $2.4 billion on a business that may make them $50 to $100 million a year. It's like a 20-year strategic mistake. So not a great deal for Foot Locker shareholders. Holy mackerel, the stock was up 80%. That just goes to show you how much Dick's overpaid for that. Terrible deal for Dick's Sporting Goods shareholders. If I was a shareholder of Dick's Sporting Goods, I would not trust that management team. I'd be selling that stock. We also see that Charter and Cox, two cable giants, are about to merge. They announced that too. So we've seen two big deals come right across the tape. And this is part of that story that we've always bet on, this kind of Trump takeover boom, because we know the FTC under Biden was basically blocking everything that came along. It was crazy. Now that the Trump administration is changing the narrative, thankfully, from this tariff stuff to more normalized, let's go to the Middle East, let's do deals, let's get business back in action again, let's start this takeover boom again. We are back in action. And this is great for takeover targets, because what we've done at takeover targets is we've done something remarkable. It was reminded to me, not to brag myself, but it was reminded to me, we have over a 95% success rate on all closed trade, 19% average gains. And that was mostly done under President Biden. We launched that service in January 2020. So we had the COVID year, which is crazy. And then all the rest of it was under President Biden. So this is the first time that we get to take this car for a test drive under President Trump. And I'm very excited about it. And we talked about this in a presentation, a webinar a few months back, and Lord knows I've been talking about it a few times. There are a couple of companies that we have in our model portfolio that I'm very excited about. Three in particular, actually four, that I think make prime takeover candidates. One of them, Google owns a big piece of. One of them, Buffett owns a piece of. But more importantly, we just talked about a semiconductor company on the webinar last week that sells power semiconductors that empower AI, a company that's trading under $4 a share that's already had two takeover bids and is shopping itself. Very strong company. But there's also another company that's in our model portfolio that I'm very excited about also. This is the company that NVIDIA tried to buy a few years back that the Biden Justice Department blocked. So we think that we are well positioned in takeover targets for this. So I guess what I'm saying today is we're starting to see a drumbeat of deals happen, which is what we expected when we hired President Trump in the first place. Kind of light regulatory touch, let everybody go whole hog, go crazy. And I'm very excited about that now that we're putting this tariff stuff more in the rear view mirror. But there's more to talk about there. We will be talking about, we can't get it out of our minds and our past completely. It's still there, but it's in the rear view mirror for now, as we get more of a normalized, rational, logical trade policy here that investors and business people can understand and plan around. Once trade policy starts to settle and everybody knows the rule, which is what's happening right now, takeovers could start to explode. It's no coincidence that Dick's made this acquisition attempt off of Foot Locker after these China tariffs were lowered, and this sort of started to become normalized. So these companies are now, the fog is starting to move, and they're starting to say to themselves, what do we do? How do we maximize shareholder value for our shareholders? And that gives us a great opportunity at Takeover Target. So I'm very excited. I wake up today, jumped out of bed, very excited to attack the day. Anyway, have a great Monday, and I'll see you tomorrow.